everyone, welcome back to Mindful Investing. Sprouts Farmers Market stock is up 16% year to date, but is there more room for growth? In this video, I'll show you my 1 year and 5 year price targets for SFM, break down its fundamentals, show you the key technical levels, and finally decide if it's a buy at today's price. Also, I've built a spreadsheet where I track all my stock predictions so far, including percentage gains or losses, and if I personally own any shares, I've added my average price and returns. That spreadsheet link is in the description below, so please feel free to check it out and save it for future reference. And make sure to stick around until the end because we'll also compare SFM with its biggest competitors like Walmart, Costco, and Kroger to see which one looks the best buy right now. But before we jump in, here's my quick forecast for Sprouts Farmers Market. Currently, SFM has an EPS of $4.85 and an expected annual EPS growth rate of 16.7%, and it trades at a PE ratio of 29.94. With these numbers, my model gives a 1 year price target of $170, which is about a 17% upside, and a 5 year price target of $314, which is about 116% upside from the current price of around $146. I do not own any shares of SFM right now, but based on this math, I believe it's a buy at these levels. I wouldn't call it a screaming buy because for me, that requires at least 200% upside in 5 years. But with over 100% upside potential, it's still a solid long-term opportunity. All right, now let's look at its business model and see what exactly does Sprouts Farmers Market do. SFM is a grocery store chain, but it's a bit different from traditional supermarkets. Their focus is on natural, organic, fresh, and healthy foods, which puts them in a very unique position compared to giants like Walmart and Costco. Here's how they make money. They run grocery stores that emphasize produce, vitamins, natural groceries, and healthy packaged goods. They employ about 35,000 people and generate about $8.4 billion in annual revenue. Their revenue is growing at 16.8% year over year, which is very strong for a grocery company. To put valuation into perspective, their price to sales ratio is 1.73. Now, for beginners, price to sales ratio means you are paying $1.73 for every $1 of revenue the company makes. In the grocery sector, anything under 2 is considered very reasonable, especially when revenue is growing in double digits. In the most recent quarter, SFM reported $2.2 billion in revenue, showing solid execution and consumer demand. Now, let's talk about their balance sheet. Sprouts has $263 million in cash on hand and $502 million in free cash flow. On the other side, they carry about $1.67 billion in total debt. This isn't alarming because they generate strong cash flows to manage debt payments, but it's something worth keeping an eye on. The strong free cash flow gives them flexibility to invest in new stores, expand operations, or return value to shareholders. Looking at their charts, here's what stands out. On the daily chart, SFM is trading below all the key EMAs, which usually suggest a cooling off period. On the yearly chart, it's approaching its 50-day EMA with a support level around $126. And if we go to the weekly chart, the 200-day EMA is right around the $85 range. If the stock ever falls to that level, it would be a very attractive point, and I believe many long-term investors would pile in. Personally, I was watching this stock back when it was trading around the $30 range. I never bought it because it never really pulled back to its 200-day EMA in the last 2 years. Maybe now we'll finally get that chance. And now let's compare Sprouts to other grocery retailers like Kroger, Walmart, Costco, Publix, and Whole Foods. Starting with Kroger, my model only shows 7% upside in 1 year and 38% in 5 years. And for Walmart, 8% upside in 1 year and 47% in 5 years. Costco, it only shows 9% upside in 1 year and 54% in 5 years. Publix is a private company, so no stock to buy yet. Whole Foods is owned by Amazon, so there is no direct stock either. Compared to all of these, Sprouts Farmers Market stands out as the best opportunity with much higher upside potential according to my model. So to sum it up, Sprouts Farmers Market is growing fast, has a strong balance sheet, reasonable valuation, and more upside than its competitors. Technically, we might need a little more pullback before entering, but fundamentally, it looks like a solid buy for the long term. Now, I want to hear from you. Would you consider buying SFM at these levels or would you wait for a bigger pullback? Drop your thoughts in the comments below. Please don't forget to like, subscribe, and check out my stock prediction spreadsheet linked in the description below. Thanks for watching, and I'll see you in the next video.